Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are likely to have a cautious start this morning due to the risk-on sentiment in the global markets. Let's talk about GIFT Nifty trading around that 0.20% lower levels, indicating a lower start coming in for the Lal Street. US stocks dipped after Federal Reserve minutes pointed to further rate rise even at a slower pace though. US factory data suggested a weaker than expected order in May. Let's talk about S&P 500 index and tech-heavy Nasdaq. They fell overnight by close to 0.20%. Asian markets, no different trend playing out there, followed Wall Street lower on Thursday. Highest delivery back home in terms of percentage is seen back in Bosch, Bharti Airtel, Torrent Pharma, HDFC and Ultratech Cement. Back in primary markets, Senco Gold IPO was subscribed by 2.68 times on day 2. FIIs, they've bought shares worth around 1,600 crore and DIIs, they've sold shares worth around 430 odd crore. Let's talk about FNOQs out there. 79 stocks which have seen long build-ups. This includes the like of Colgate-Palmolive, Exide Industries, BHEL, LIC Housing Finance and Bosch. Along with that long unwinding that's been seen in HDFC, Canfin Homes, Reliance Industries, Bajaj Finance and Persistent Systems. Let's also talk about the 31 stocks which have actually seen short build-ups, and that includes the like of Dixon Technologies, Atul, LTI Mindtree, Bandhan Bank and SRF. Now 55 of them have also seen short covering activities, and this includes the likes of IDFC First, MCX, Indraprastha Gas, HDFC AMC and Indiabull Housing Finance. Now the stocks under FNO ban at this point of time, NSE has removed Indiabull Housing Finance from the FNO ban list and has not added any fresh stock to the list. But let us get going and discuss some stocks and strategies with Chandan Taparia, Head, Derivatives and Technical Research at Motilal Oswal. Good morning there, Chandan. How is the trade setup looking like? What are the PCR ratios right now suggesting? Looks like a bit of overbought territory, and if that's the case, markets of Nifty has been on an uptrend for the last 7 consecutive sessions. You finally see some profit booking creeping into the markets?
Good morning, Nickey. Thanks for having me. We have seen good run up in the market in last couple of days. The market is continuously making higher tops, higher bottom, especially in last 6-7 trading session. The index has seen the rally of more than 700 points. So major trend is intact, but after this run up, some sort of consolidative move could be there. We have seen some decline in the put call ratio to 1.37, 1.38, but put call ratio has fallen more in the bank Nifty. So, but trend is intact. However, FI's long short ratio now has gone to 71-72%. An earlier high when Nifty was at 18,888, it was near to 75-77 level. So all the indicator and all the ratios are near to the oversold territory. But I believe the major trend of the market is intact. Until the key level is not broken, I think this momentum could continue. So as of now, I look at the bullish stance in the market because it is respecting to all the support. Even yesterday also, it respected the support near to 19,333 and turned higher. So as of now, the immediate support is 19,300. We believe that any decline towards 19,333 could be buying opportunity with support of 19,250, and index can continue this momentum towards 19,500 and 700 zone. Now, if I talk about the Bank Nifty index as well, because that is comparatively witnessing some consolidation at higher level. So if 45,000 is broken, then we may see a correction of 300-400 points, and major support will be 44,444 in the banking index.
Right. So essentially the strategy that you would deploy for both Nifty and Bank Nifty, would that be buy on dips? And also for Nifty, the strategy is there for our viewers after the levels that you've suggested. Am I audible? All right, Chandan, just to repeat what I was saying, reiterating that, just wanted to know the strategy that also is, you'd like to deploy for Nifty and Bank Nifty right now, after suggesting the levels that you suggested. Yeah.
So after talking about data setup and level, I believe the decline could be both. So suggesting to buy Nifty with support of 19,250, looking for an up move towards 19,700 over the week. In Bank Nifty also will suggest to buy, and strategy is to buy near to 45,000, put support near to 44,600, look the move towards 45,750 marks.
All right. One last question that I have for you before I address the stocks and news, HDFC and Reliance. These are the two counters. Probably some short covering activities has been noticed. How are you looking at these two charts? You think buying opportunity coming in there, or investors are better off of these counters for now?
No, the major trend of these stocks are positive. However, all three stocks have seen some profit booking decline, and that is the reason that why market took some pause. So I believe HDFC Limited and Bank let them consolidate, but Reliance I'll go with buying opportunity. If you look at the price setup on last trading season, we formed a bearish candle, but on weekly setup, the major trend is positive and supports are gradually shifting higher. So Reliance, I can focus on the buying side. Here, if I look at the support wise, then I think 2550 could act as a support. So decline near to 2550 could be bought for a move towards 2650, 2670 kind of level.
Right, Chandan, stay on with us. We'll just quickly address the stocks and news and come back to you with the market open. The stocks that need to be on your list this morning: JSW Steel, Ujjivan Small Finance Bank, DCB Bank and Adani Wilmar along with Marico. Let's talk about JSW first. JSW Steel is going to be replacing in HDFC in BSE Sensex from July 13. JBM Auto Components, Zomato and EPL Apollo Tubes would be replacing in HDFC in S&P 500, BSE 100 and BSE 200 index respectively. Ujjivan Small Finance Bank, where the Q1 deposit has grown 44% year on year and 4% sequentially. Disbursements jumped 22% YOY, but they slipped 12% sequentially. Well, if you talk about the overall YOY growth, that's driven by robust growth in micro, banking, housing. That's the segments where the growth is coming from. The CASA has also increased 27% year on year, but it's dropped 3% sequentially. Now, DCB Bank is another one that you need to keep on your list this morning. RBI has allowed Tata AMC to raise stake in this bank to up to 7.5%. This is going to be through schemes of Tata Mutual Fund, but aggregate shareholding at any given point of time should not exceed 7.5%. Adani Wilmar, another one on your radar this morning. Company delivered strong quarter of double-digit volume growth. It's clocked 25% growth in Q1 FY24. It's capturing on the strong consumer demand. The food segment has crossed 1,000 odd crore of revenue for the quarter. Oil and food recorded around 50% jump in the volume growth too. Marico, a bit of subduedness there. Domestic volumes have grown in low single digit. Consolidated revenue declines also is in low single digit. They expect a visible pickup from the coming quarter, given that they're seeing a sustainable. Marico is seeing a sustained healthy trends in market share and penetration. International business, however, on a brighter note, had delivered high single-digit constant currency growth, and the gross margins for the company is also expected to expand materially, both YOY and sequentially. That's the word coming in for Marico. But I'm going to quickly go back to Chandan and check with him how is he looking at the auto counters right now. Something like a Maruti Suzuki, which crossed 10,000 rupees level last session. How are you looking at it right now? And something like ITC too, which was at all-time high levels.
Yeah, so Nifty Auto itself looks strong, looking for further momentum. Maruti hit the 5-digit mark recently. A major trend is positive, and this, I think, 5-digit marks coming after a long time. I remember in 2017, it made high near to 99.96, just missed the 10,000 marks by 4 rupees and then corrected all the way to lower zone and now again turning back. So I think this major consolidation breakout will add the more momentum. We have support near to 97.50. Stock has potential to rally towards 10,500. If you talk about ITC, we have positive on FMCG name including ITC, Colgate, HUL. The stock is continuously making higher top, higher bottom, one of the strongest counter. It rallied by around 43-44% in this year also. Major trend is in tech. So we believe momentum could continue with support near to 464. One can continue to hold the long position for move towards 495 kind of level.
All right, so that's the word coming in on ITC and Maruti Suzuki, but a bit of update coming in for Maruti. Morgan Stanley has come up with a report. It has maintained that overweight rating and the target price of 11,164. That's from the 10,000 levels that we're looking at. And it's talking about the Invicto launch, which is small volume and probably the highest expensive one in the stable, expected to give them a higher ASP, that's the sale realization. And overall, the company has already received 6,000 bookings for that particular car. And mix and market share is only expected to improve going forward for Maruti Suzuki, close to that 10,000 level, just shy of that level. So that's the one. Maruti Suzuki is clearly, the one which has gotten all the traction going for them for all the right reasons, be it the introduction, be it the gaining market share, be it the gaining profitability. Auto space seems to be in top gear right now. Let's talk about Nifty 50 and see how the market has been faring in. It's going to be starting in any time soon. We are expecting some amount of cautiousness to build in for Indian equity markets. Asian markets thus far have been indicating, and the GIFT Nifty was indicating of a cautious to a negative start, mildly negative start coming in for Indian equity markets. Remains to be seen if we actually manage to, or let's just say, does finally the bulls on the Lal Street finally give up and Nifty would see some amount of profit booking. But how slender would the losses be? The direction clearly is in the favor of bulls right now. Nifty 50, well, we're looking at a flat start with some amount of negative bias. As indicated, we were expecting cautious start given the global cues after the Federal Reserve minutes that indicated rate hikes, though at a slower pace, was expected to have some amount of risk-on sentiment, risk-off sentiment coming in for the markets. Let's also talk about Bank Nifty. That's the one where we probably need to look at a bit of underperformance coming in for Bank Nifty as well, where the losses are to an extent of 0.1% of loss coming in for Bank Nifty. Also in terms of the sectoral indices that we have, just to see, and apart from that, the mid cap and the small cap index there for you, just to see if there is some amount of outperformance coming in from the broader counterparts. Thus far, the trend has been holding up. Remains to be seen in today's session also will we manage to buck the trend, and there the chart is, and there the trend is probably just living up to the repute out there, outperforming the larger counterparts with gains of around 0.2% out there. Let's talk about small cap index there for you. See a bit of outperformance coming in line, actually pretty much in line with the mid cap index. And let's talk about the other sectoral indices that we have overall in the chart. IT, that's the one which has witnessed some amount of profit booking in opening deals, and FMCG basket too has given up to some amount of losses at this point of time. In terms of pharma, that's the one which has actually managed a flat start with positive bias. And in terms of other sectoral indices that we have, auto index right now too, it's given up. It's completely surrendered to some amount of selling pressure. Clearly seems to be sweeping into the markets. Whether the momentum will accelerate remains to be seen. But right now, it looks like market breadth more seems to be in the favor of declines. But actually, let's understand how divided the market breadth is. Realty index too. That's the one which is actually outperforming counterparts by a huge margin, right? More than 1% gains coming in for Nifty Realty Index. Advances 20, declines 30. Market breadth right now in the favor of declines. Let's address top gainers. Britannia, M&M and Asian Paints, along with Power Grid, Ultratech Cement, where we've seen the delivery percentages being higher. UPL, Reliance and Tata Motors. Well, Reliance Industries is lending in the support to the markets. The losses had been sharper had it not been for gains coming in from the index heavyweight Reliance Industries. Eicher Motors, Hero Motocorp and Bajaj Auto. So basically it's taken Auto Pack, which is the one which is dragging the markets lower, but real estate seems to be contributing. IndusInd Bank, Tata Steel and Hindalco. These are some of the top losers that we have on our screen right now. But I'm going to go back to Chandan and check with him. How is he looking at the entire auto space? There were a couple of names which have flashed in, which are top losers. Within the space, we just discussed about Maruti Suzuki, but anything else, Chandan, that looks attractive?
So yes, I'll focus on M&M, Mahindra and Mahindra. However, the momentum is clearly intact. Might be some pause of one day, but overall trend is likely to intact in most of the auto name. So M&M is the one name where we'll focus on the buying side. 1450 is the support. Stock can head towards 1550 kind of level. I think Maruti will again find support at lower zone, and hold of 10,000 can take it to 10,350 to 10,500. Positive on the Tata Motors as well. Consolidation of 3 days getting over. Let it hold above 595, then we can see move towards 615 kind of level. So positive bias could remain in most of the auto name, and I think a small decline could be both. And a couple of these stocks will be outperformer in the entire sector.
There's a divergent trend clearly playing out for the auto sector. M&M is the one which Chandan just suggested right now. It's also the one which was actually contributing to the gains coming in for the markets. And on the downside, you have something like a Hero MotoCorp and Eicher Motors. But Britannia is also the one which is unexpectedly make it to the list. Yesterday we saw ITC coming in, and today we're seeing Britannia actually rallying. What's your view on that? And how should the traders be looking at it? Is it a good buying opportunity at this level, Chandan?
Yeah, so positive on the FMCG name, and we believe that now participants will focus on the safety, margin of safety when Nifty is near to 19,400 marks. And I think FMCG stocks can provide that, and that is the reason that counter like ITC, Colgate, HUL, Britannia, Godrej Consumer Product all will be in focus. So I think Britannia could be continuing the bullish stance. 51.50 could be immediate support to drive this move towards 5,400 level.
All right, so that's also HDFC and HDFC Bank. How would you be looking at? It's a bit of over-discussed stock, I believe, but I believe the traction continues overall coming in for these two names, right? Apart from that, also Bajaj Twins, how are you looking at the financial space overall? You said more of the interest will be generated in pharma, but do you think financials will take a hit and probably backseat, or at least on the technical charts, and it's FMCG which will continue to garner more interest from the market participants?
I don't think that BFSI will take a hit, but some sort of consolidative move could be there for next 1-2 days, because major trend is positive, and we can also understand that after the sharp run up, some sort of consolidation is always good for the market to start the next leg of rally. As we discussed, that 45,000 is the immediate zone where Bank Nifty may find some stability, and we can go with buy on decline. Now, if I talk about SDFC Bank and SDFC Limited, some profit booking was seen from higher levels. SDFC Bank has corrected from 1757 to now 1665. I think 1625, 1640 could provide the major support to again go with buy on decline stance. If you talk about SDFC Limited, here also will look for buying opportunity near to 2720 kind of level. So all two stocks which are negated lower level lows, let them find the support near to key zone, and I think then again buying interest could emerge. Bajaj Finance already seen good run up, and you understand that the stock which have rallied much to participate in the market, by some sort of leadership could change. Like yesterday, you noticed when SDFC Bank was falling down, your ICICI Bank was holding well and started the command on the higher side. When selective heavyweights are falling down, your ITC, FMCG stocks are holding well. So I think some sort of consolidation could be there, and that could be bought. If you talk about Bajaj Finance, I think decline towards 7650 could be bought for next leg of rally towards 8,000.
All right, so that's the word coming in from Chandan. But Chandan, we're going to leave it at that, and thank you so much for taking on the time and speaking to us this morning.
Thank you.
Right, let's actually navigate our conversation now to the fundamental side of the story. There is enough and more needs to be spoken about. The market capitalization of BSE listed company has hit that fresh record high level of 300 lakh crore. To discuss this more and the direction of the markets, probably the themes that you need to be invested in, we're being joined by Gurmeet Chadha, Managing Partner CIO of Complete Circle Wealth Solution. Good morning. Gurmeet, how are you doing? It's been long speaking to you. I'm going to start off by asking you, it's clearly a bull run coming in for the market, pretty structural in the nature. That's the story everybody's been probably aware of. BSE listed companies, market capitalization is around that record high level, with multiple stocks being, at lifetime high levels. How are you reading into the markets, and amidst the lifetime high level stocks, which is your favorite pick?
So market has taken everyone by surprise. So even if you see last 2 months, India has got almost 85,000 crores plus of flows, which is a little over $10 billion. The indices have gone up. Even in dollar terms, we are up like 11-12%. Obviously, the small and mid caps have performed better, being up 18% plus, both mid and small cap indices. And market, obviously, this is led by more in terms of multiple expansion. Driven by FI flows. So you now trade at about 21 times. If you take about, let's say 960, 970 as the FY24 EPS. So I think clearly you got to be more selective now at these levels. I'm not saying that markets are very expensive. We are in the fair plus zone. So pockets where earning visibility is good is where you could be. There could be some contrarian opportunities also, with market now expecting things to improve. We saw that. Some bit of it in pharma names. Pharma also being a little defensive. Also, the weight of pharma was less than 3.5% in Nifty, which is like quite a low in last 8-10 years in terms of representation. and maybe selectively IT. IT, I would probably maybe want to wait for the earnings more since we're just maybe 1 week away. But those are the pockets which could also see some contrarian things playing out depending if the guidance and results are good. So, but as I said, at 21 times, be more selective. And while there's reason to celebrate 300 lakh crores and more milestones will come, but we should not try and chase momentum.
All right, not chasing the moment, but if you were just supposed to look at a lifetime high levels of stocks like something like an ITC, after the demerger news has finally come in where it's probably under the way, Maruti Suzuki too. There is this new launch Invicto, which is apparently the most. How interested are you in this car? Let's start with that, and then probably graduate our discussion to what do you like within the basket.
So I think clearly the car segment will outpace the other segments in auto. We've seen that in China, happen. In fact, China now sells far more number of cars than two-wheelers. I think if you see 2016 to 22, two-wheeler industry hasn't gone anywhere in terms of volume growth, right? We are barely coming back to pre-COVID levels now. So I think that trend will change. And within two-wheelers also, we are seeing the ones who are doing premiumization doing better. And that is why Hero has been struggling. And TVS and Bajaj and Eicher in the segment is doing. So I think I remain constructive on four-wheelers. I think Maruti is finally getting its strategy back. I think after 2013-14, once they got that 1.3 liter engine, where they had top four best-selling models of Maruti, including Alto, Swift, Baleno, etc., Brezza. I think they're now getting the UV portfolio back. I think they were a little late in getting the UV portfolio, and now with a series of launches, I think it should pick up. And I think 2017 Maruti was 10,000. So it's actually homecoming after almost 6 years. In terms of getting back to the 10,000 mark. I think the response to the hybrid is pretty good. I mean, it's both at the mid end and the top end. I think that Toyota tie-up would really be a breakout for Maruti. So constructive there. But I like my M&M more. I think valuations wise, still at about 16 times despite the run up. They are getting the market share back in the SUV portfolio to what 19% now, slightly to inch up more. 5 successful launches back to back. Even the tractor segment this year could see single digit growth, could be even double digit if rural recovery is strong. In fact, last year also they gained market share from 39 to 41%. Good capital allocation strategy in place now. They've exited loss-making JVs. Also, the farm equipment business giving very constructive view. So overall, I think it's all about sum of parts, all doing well for them. It's more constructive there.
Sure. Gurmeet, I want to understand from you, since the markets are near that record high level, do you think a little bit of caution is already there, right? It's already sensed in that trading volumes which remain thin, which I'm sure is a bit of good news for the markets because there is fair dose of cautiousness within the trend. But do you think now the rally could be led by more of the defensive names like FMCG and IT perhaps will start contributing to the rally? We've already seen ITC doing well in previous session with that all-time high level. But within the FMCG space, what do you like?
So FMCG space actually is one of the best performing index for this year. It's almost 20% up since Jan. So clearly outperformed. So within FMCG, we like more companies which are having a branded food. And so Britannia has done well. Varun Beverage, if you may want to consider that, has seen a stellar performance. We like Tata Consumer. I think that is a more comprehensive play on more brand premiumization in cereals. So they are in pulses, dry foods, breakfast cereals. Then you have out of home consumption like Nourishco, Starbucks, and then there is water and beverage segment, which is the bread and butter. Which is tea, coffee, salt, etc. So I think, and since the new leadership, Sunil coming over, I think it's been a great run. So that's another one. And I think ITC also, despite the run, I think the cigarette volumes have been very strong. So if you see, even last quarter, it was double-digit volume growth for cigarettes. Taxes have been very stable. There's been a lot of action by law enforcement agencies on smuggled ones. FMCG business continues to surprise positively. It grew almost 19% YOY. They're finally getting the double-digit margin in FMCG, and FMCG takes time. So if you see HUL, for example, you have 10 million outlets. Right? Tata Consumer right now is 1.5 billion. So distribution is very understated there. And I think finally a lot of these companies are getting active. So I think FMCG, and it's a good play on rural recovery because inflation did had a bearing. There was rural distress. So I continue to be constructive, but don't pay that 80, 90 multiple. I think then obviously your near-term returns could be subdued.
Gurmeet, what is the next sector that you think would probably be the driver for the markets? We've spoken enough and more about financials. Sure, I'm sure you're going to be talking about them in just a bit. But if it's not for financials, which other place can the market participants be looking at with the market being right now at record high levels?
So there are two pockets we like very clearly. One, I've said this earlier that I'm of the opinion that this is of 2003-7 kind of a housing-led revival of capex cycle. And it may not be as ferocious as 2003-7, but there are enough indicators. So we are very constructive on this building material space, led by housing, strong housing, resilient housing despite rate hikes, very strong spending on infra. Some of the private investment cycle is coming back. So, for example, look at cement. After a long time, we are seeing capacity utilization now almost inching to 80%. So the stronger ones, let's say, for example, Ultratech, which is now 22% market share, they're likely to add another 20 million tons to already 130 million tons, which they have. And they made a point of being at 100% capacity in March. Clear leader in grey, blended, white cement, RMC as well. They improved their cement to clinker ratio also. PET and coal prices are down, petcoke and coal, so which should have some impact on margins. So overall, rightly positioned. And after a long time, you're seeing cement volume demand coming back. We like some of the tile makers, pipe makers. So if you see, for example, the PVC pipe, the plumbing segment has been very strong for Q1. Even the agri also, there was a peak season in Q1. So that should probably get reflected in whatever numbers come your way, whether it is Astral or APL Apollo, etc. Also tiles as well as sanitary ware. That again segment is looking pretty solid. So we like that space. In fact, selectively can be looking at some real estate names also. After a long time, you're seeing some balance sheet discipline there as well. So that's one space we like. And the second is this manufacturing space where, especially the EMS, I think the electronic manufacturing services, I think that's one space India will finally see a lot of winners. While the known ones are already there, like Dixon, Amber, etc. But you will possibly see new players also coming. Apple alone sourcing more than $1 billion will make lot of other companies look at it. So entire segment, mobile, durables, LED lighting, panels, etc. I think we'll see a lot of space. Very constructive in that space as well.
All right. So building material is clearly one that I picked up on, but I wanted to chat with you on the entire banking space. HDFC with HDFC Bank, IDFC with IDFC First Bank, a lot of mergers playing out within that space. How are you looking at that space and your preferred bets within that space?
So I think one clear winner as India, really continues to grow at 12% nominal GDP, maybe more. Once interest rates start coming off, it's some time away right now. I think it's financials. I think look at even after the merger, and I've said this earlier, your largest bank is 25 lakh crore. Private bank is 25 lakh crore balance sheet, which is $300 billion. You pick up any top 5 banks in the world. The top 4 are obviously Chinese. They're like $5 trillion balance sheet. JP Morgan is $3.5 trillion. BNP Paribas is $3.5 trillion. In fact, we're not even in top 30. So I think we would we'll see more consolidation. There'll be a lot of big banks will keep becoming bigger as we create more credit and we reach more segments which earlier did not have access to formal banking. So we are very, very constructive on large private banks. I think they'll continue well, and selectively SBI and maybe Bank of Baroda. I think there is a real credit discipline we are seeing. Finally, the impact of bankruptcy law is also seeing, and corporate balance sheets. I've not seen this better in a long, long time. Second, I think the segment which is making credit go to the sections which are underbanked and not earlier. So, some of the small finance banks like Equitas, some of the MFIs, which are really going to tier 3, tier 4, which is semi-urban, rural, and more rural, something like Credit Access, 5-star, Home First in affordable housing. I think another 30-40 crore Indians will come in the formal banking net in terms of having access to formal lending. And I think that will create a lot of wealth. And this credit cycle, despite interest rate hikes, I think is is here to stay for a long time. You see, despite rate hikes, we are still growing credit at good healthy double digit. But I think there will be a liability war now with HDFC alone. Probably will try and garner about a 1/4 of the share there. So the guys with better liability side probably will make a difference. So focus on more deposit growth now than asset growth.
All right. Are you sensing, Gurmeet, a sense of cautiousness, which is precursor to the sell-off with the kind of levels that we've seen for the mid caps and the small cap basket overall, which thus far has been an outperformer? And that's where most of the people are saying the real party lies. Do you agree with that? And if yes, within this space, what do you like?
No, I 100% agree. I shared this data earlier that if you see last 10 years, from Nifty 500, India had 20% 10 baggers. So the economic growth gets reflected in market cap far more in India than other nations. China is just 3%. Even NASDAQ is 11%, right, in the last decade. So we clearly, as economy grows, as GDP makes new milestone, a lot of that gets reflected. And obviously it goes beyond the top 100 stock. But I think the recent run-up has made few pockets very expensive. There is a bit of a FOMO there. And whenever there is FOMO, I think is where I start getting caution. I think some of the names are getting overhyped. So some defense names, I think, have run up. Defense is a very long gestation. The order you get now, you probably will take 5, 7, 8 years to execute, right? Maybe more at times. Some of the PSUs in defense are now trading at 30, 40 multiples. So be careful. It's a great long-term space. It's just that the valuations, you got to be a little more careful in assigning those valuations. Similarly, some of the new age names, not everybody is going to survive, right? Some of them will probably make it, but the ratio is going to be probably 10, 15% amongst, let's say, if we have 8, 9 names. So just be a little careful, right? Because they're still not making money and interest rates are still high and markets are at 21 times. So just be a little careful there as well, right? Once probably if they start becoming profitable, they'll probably be at 200, 300 P, right? So in fact, I am of the opinion that ones who shrink will probably do better and will focus on profitability versus scale. It was all scale till interest rates were almost zero. Now it will be more about profitable growth and people who can shrink. So I think, and these are the few pockets you got to be a little careful.
Gurmeet, what do you think of something like Suzlon Energy and Inox Wind? These are the stocks where most of the traction is these days, and Suzlon is clearly the one which is the talk of the town. People have clearly forgotten the levels that Suzlon was once at, 700, and now probably, you look at that 18 rupees levels that the stock is sitting at. So clearly the history has been wiped off, but there has been a significant momentum. There is 120% of uptick that we have seen for the counter. More than 120% in the last 1 year. 1 month, last 2 months also has been good for this one. Inox Wind, there was a couple of investor meet which took place, and the stock has been, it's been in traction ever since then. How are you looking at this these two counters right now?
Wind energy is very limited, and that's the reason one golden rule in investing is what you don't understand, you don't invest. And I think there is, we don't know how tech will play a disruption here, whether we'll adopt wind more or we'll adopt hydrogen more, or it will be more hybrid or it will be more ethanol. We don't know that. So I think the best way to play, so I know the power demand is going to go up, right? So you play proxy to it. You play power utilities, you play cables and wires, so we like KI industries. I think very, very strong play. You want to play the power capex, there are enough plays there. You want to play, so the Polycap has been one of our top holdings. It's both a proxy play to manufacturing and power and housing, which I spoke of earlier part of the show. 22% share in cables and wires. They've given a great guidance for FY25. One of the very good performing stocks, still more reasonable compared to some of the other paint names and other maybe cement names. And getting the fast-moving electrical goods strategy back in place. So they're working very hard on the FMEG bit, getting the B2C mix right. So I think I'm better off playing power utilities, cables and wires names, and more proxy play there than playing this. I personally like the ethanol story more. I think India probably will see more ethanol, especially in the semi-urban rural areas, and that's something we are right now more focused on.
You're saying you're more bullish on sugar stocks coming in, and any specific pick that you have from within that team?
Not exactly sugar. I'm more interested in the technology of ethanol. So, there is news of now methanol variant of methanol getting blended with diesel. So, Praj is something we track very closely in our investment universe, with 2G ethanol and compressed biogas and a lot of other stuff there. It's basically a enzyme-based research and manufacturing company, and there are a few others we track. So that's something we are tracking more closely. And we are trying to play the EV through the tech side of it. We are not really in terms of battery.
All right, Gurmeet, we're going to leave it at that. Completely running out of time, but thank you so much for taking out time and speaking to us this morning.
Pleasure. Thank you.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.